Good morning, folks, and welcome to today's video. So I am slightly later than normal because I had a webinar to attend this morning. I am a member of the Falcon Trading Guidance trading community, if you're unfamiliar with it, and at 7 a.m. on Thursdays we have a live webinar. And I was also eyeing up a trade. I was trying to concentrate on a trade. I placed a trade this morning on pound Kiwi, and I'm going to break that down for you in a minute. So I wanted my focus to be on that, and then I was at the webinar, so I couldn't make the video when I normally would. But I'm back now, and I'm going to break down this trade for you, and then break down just to say that it was actually a loss, and I'm going to touch on that in a minute. And then I'm going to break down the three pairs which I have on watch and give you my thought process. So why was I looking at pound Kiwi for the short? I was looking at pound Kiwi for the short because we broke above this area of value here. I touched on how on all time frames that wick which you saw there was just that. It was just a wick. Okay, if we draw down to the daily chart, the 4 hour, I believe on the 1 hour as well, and when that happens, we deem these wicks to be merely volatility and not indicative of the sentiment of the market. Okay, so if that's the case, then the narrative as I see it changes slightly, and how I see it is that we broke above here, caught people the wrong side of the market, and then pushed down aggressively, which is what we typically see. We had an impulse correction continuation, bit of a steep correction. Okay, but if we just measure this with the Fibonacci tool, you can see that we pulled back about 50%, so that's a healthy correction. Okay, and we were correcting, we broke below this low. Okay, we broke impulsively below this low, and we were correcting, giving me a clue that this was just the market building volume for the next leg lower down to here, or down to this low here. And even if we did move down to here, we would likely correct in this area as people that were getting short here took profit in this area. But regardless of whether we go to here or here, there was a lot of profit potential to be made to the downside. Okay, so you can see we consolidated below the low. Okay, not through it or above it, we were below it, so that was a tick in the box. You can see that we had if I just drill down a second, you can see that we had a separate correction here. We have this continuation structure here. Price taps the highs, pushes down, forms a separate correction, and then we start consolidating below the lows, giving me a clue that this is an independent structure. So when I woke up this morning, what I was looking for, remember I said to you in my previous videos that I wouldn't be looking to, that people that were getting short here and here and here were likely too zoomed in, and they weren't factoring in that this was actually the start of the structure. And I said to you that I would be waiting for price to tap in to that area and push down before I get look to get short, which is exactly what I did. Okay, so that was my forecast, which was yesterday morning's forecast. Feel free to watch that video if you're interested. And I said that I did this forecast last night, so you won't have seen this forecast. But what I had on watch this morning was I forecasted a break below, if you can see that, a break below this wick here, followed by a correction. And the reason being is that if we tapped into this area here, which was the start of the structure, and we did so by way of this kind of little mini ending structure, they're just cutting through the wicks, and we push down. If there was a chance that this could be a bull flag to push higher, okay, so we end up with something like that, where the wick there becomes the first touch of a kind of 1, 2, 3 touch structure to push higher, especially when we kind of have this kind of descending structure here. Okay, so to mitigate the risk of that actually happening, what I was looking for specifically was a correction, was priced to impulse down and correct below this low, because if it corrected below the wick, then that would suggest that there was not enough liquidity here to send price to the upside for that kind of structure, that bull flag to push higher. Okay, so the correction is usually the confirmation that we look for to determine that that is just the bigger players stacking their orders for the next leg lower. Okay, so if I just drill down, so we had on the 4 hour chart, we had this at the time, we had this solid push down there, okay, which closed at 6 a.m. Okay, so we'd close back below this area of value. We'd close below this high, this high, and this high. That was a tick in the box. So we've had the 4-hour confirmation. So now I'm on the 1-hour chart, and I was looking so we can see the solid push down on the 1-hour chart. What I was looking for is, before I drop down to the 15-minute chart, I'm looking for one candle to close green. That candle there closed green, so then that gives me permission to drop to the 15-minute chart to look for entries, which is when I was looking for my entry, and this is the trade that I placed. Okay, so I could see the structure. I had my stop loss slightly wider than I normally would, because this is pound Kiwi, and pound Kiwi tends to, the spreads, as you can see at the top of the screen, are slightly wider, and also it can be a bit of a wicky pair as well. So I set my entry just on the break, slightly lower down than I normally would as well, because of the spread. Once again, you can be tagged in a little bit earlier than you otherwise intended to. So I got tagged in, and then now I'm managing this on the 1-hour chart, or I would have done, but I was literally I was tagged in there. So that 1-hour candle closed, and that looked really solid for a move to the downside, but then price just wicked up and took me out. Okay. Now, am I bothered by this? No. Did I do anything? A lot of people would say, how can you not be bothered by losing money? Well, already I know that you've got psychological work to do if you're bothered about losses for more than a momentary amount of time. The way I look at it, I already know that if you're bothered about a loss or you're annoyed by it, you're not thinking probabilistically, you're not judging your performance over a large sample size of trades. And I also know, if you're bothered about losses, that you're not treating trading like a business. And the way I know that is because if you were to run a clothing store, for example, if I said to you, let's say you did run a clothing store, and I said to you, "Are you annoyed that you had to buy stock?" You would probably look at me and with a confused look on your face. You'd say something along the lines of, "No, because that's just the cost of doing business. You have to buy stock." But it's the same thing. If you're not thinking about trading the same way, then you're, by definition, you're not treating trading like a business. I look at this and I just think, well, that's the cost of doing business. Okay, uh, and many traders would say, "Oh, what did I do wrong?" Well, I didn't do anything wrong. I stuck to my plan. I stuck to what I've tested. That doesn't mean to say that in the process of documenting over a large sample size of trades, I won't find ways to improve slightly. But I know that I didn't do anything wrong here, because we had the criteria was met. We were at the start of the London session, okay, which is when I would expect the momentum to kick in. It did, but it moved to the upside. Am I going to try and guess what price is doing now? No, I don't know what price is doing. It may be forming some kind of middle section now to push up to the next uh, high, or to this little area of consolidation there, which broke structure to the downside. But I'm not going to try and guess. Okay, I'm just going to let the market do its thing. I'm not going to FOMO in, which is where a lot of people go wrong. They take a good quality trade like this, they take a loss, and then they FOMO into the next position. I don't do that, because I'm a professional. I treat trading like a business. I wait for the market to show its hand rather than trying to guess what the market is doing. So that is pound Kiwi. That was the loss. I'm going to move on to the next pairs, because I've got a lot to get through. Right, dollar CAD. So dollar CAD, right, on the higher time frames. This is, I don't know why all these price labels have appeared on the right, but I have tried to get them off the screen, but for some reason I can't. So dollar CAD, right? We've tapped into this area here. We tapped into it, broke slightly above. We pushed to the downside. Just as with pound Kiwi, we corrected below the low, giving me a clue that we were likely building volume for the next leg lower down to this low, where I would anticipate people taking profit, and potentially the bigger players getting long, because we had a near miss here to this high here. So we may be pushing down to here to then push back up to take out this high, which this high near missed too. So that's the higher time frame narrative. And you can see, yes, we're pushing up with aggression, but sometimes we get these kind of scoop, these M style or V style structures where we scoop and then just push down. Okay. And you can see that price actually did that here. It scooped back up and then dropped. Okay. We had a bit of more of a scoop back up here, drop. So it's in keeping with how price has been moving. So as I drill down, you can see the consolidation here, okay, on the daily chart. As I drill down, we have a sharp, whoops, I'm taking screenshots here for some reason. Okay, right. We have a sharp move here followed by a sharp sell-off, right? Now, the thing that I don't like about this is, one, you can see that we're moving down quite correctively, and that we wicked to this area of value and not through it. Okay. Now, given that this is a 4-hour correction, we don't necessarily need to break above, but it wouldn't surprise me if we do, especially if we've fallen down correctively. However, you can't deny that we have had a push down from the area of value. Okay, so when I drill down, you can see that we kind of have dropped. We've moved down quite correctively. We've kind of dropped out. So I'm just monitoring this at the moment. Okay, and if we do get something, I'm just having to speed up a little bit here. I don't know why that should be further down, but what I anticipated is that, I was anticipating a tap into this area, which we've had now, followed by a push down on the flag. We have tapped into the area and we have pushed down, but there's been no flag. There's been no correction, it's just been a corrective move down. We've not really, we kind of started to drop out here. So I'm just monitoring this now just to see if we get something, like that. If we do, then I can say, yep, that is separate to this. And then I would look to get short. But given how correctively price has been moving all in all, if we just look at this, that's quite a corrective move down. I've just got alerts going off. So I wouldn't be surprised if we push back up, break the high, and potentially tap into this consolidation before pushing lower. But we shall see. If we just drill down to the 15-minute, you can see that doesn't look developed yet. That looks like it needs more development, even if it is a flag. Okay, so I'm just going to be monitoring that one. So that is dollar CAD. I'm going to just move on to the next pair. I don't know why that's there. Let's put that away. Trading View seems to be unsaving a lot of my forecasts at the minute and various things. Right, so that is dollar CAD. So a similar picture with this. This kind of ties in with what dollar CAD is doing. Aussie dollar. So we've tapped into this low here. This is partly lower down on the list because we didn't tap into the major area of value, but we did get to that area correctively, and we've since impulsed up. We've near missed to these highs here, suggesting, given that you can see that little area of consolidation, which I was anticipating that we would likely break above, break below rather, suggesting that we may tap into here and push up to take out this near miss and these highs, which we near miss too. And you can see at the moment, at least, that looks like what has happened. We tapped into the area of value, we've pushed up. However, once again, how have we moved up? You can see we've moved up correctly from the area of value, which kind of ties in with what dollar CAD is doing on the flip side. So if this is moving up correctively, then there's a chance we move back down. So that would imply Aussie dollar weakness, which would imply US dollar strength, which means that the DXY pushes up, and as does dollar CAD. Okay, so that ties in as well. But we shall see. If we have pushed up from the area of value, we have had a solid, we've rejected on the 4-hour chart. I'm just looking to see on the flip side, just as I was with, and it's moved all my forecasts again for some reason. I'm just looking to see if we get a correction which I can filter and get long on, but at the moment I'm not seeing anything that I can sort of separate. We're not seeing it. There's no sort of correction there. You see, it's just pulled back sharply. So I wouldn't be surprised if we're perhaps pushing lower on the inverse of what dollar CAD is doing to test perhaps this area of consolidation here. Okay, we shall see. I'm just going to let the market do its thing. That's what I was saying at the beginning of this video. I don't FOMO into positions. One of the reasons people lose money is not because they don't know what they're doing. Okay, trading is not massively complicated once you know what you're doing. It's because people FOMO in, and they FOMO in for various reasons, because they're trying to get rich quick, sometimes because they're revenge trading because they took a loss like I did this morning. I don't do any of those things. So, if you know how to get into winning trades, then the rest of the battle is just staying out of the losing ones. And a lot of the time that is psychological in nature. Okay, so this is my least favorite. Okay, I put that away, and for some reason that's unhid itself as well. I'm not quite sure what's going on with Trading View this morning, but regardless. So on the higher time frames, we had this we had this 1, 2, 3 touch structure. Okay, we tap into there, we tap into this last exchange of liquidity, consolidation, and we push up from that area of value. Okay, we have a 1, 2, 3, which taps into this area of consolidation, and we push down. We then tap into this low here, which we this low near miss to here, this low near miss to here. We tap into that, we push up. Okay, so there's no need to come all the way back down to here or down to here because we've already done what price needed to do. However, what do we have here? We've pushed up, we've left a near miss here to this high here. Okay, so we don't need to come all the way up to here at this moment in time, but we have a near miss to here, so that might likely get filled, and you can see the consolidation here. Okay, so this might just be a pullback into this area for price to go along to take out this near miss and this high which it near missed too. Okay, one thing I don't like about this, and one of the reasons it's last on the list, is because if we just measure, so if this is an impulse correction continuation to push higher, we've kind of pulled back 60+% of the move, which is, okay on pairs such as pound kiwi, but we don't normally see that so much on euro dollar. Usually the line in the sand is sort of the 50% mark. Okay, so that alters my thinking and my entry ever so slightly, especially when we've kind of near missed to this area and pushed away. I wouldn't normally be looking at this for the longs today, um, until we got down to this area, if we've actually near missed to a low. But if we just flip to the DXY, okay, so if we flip to the DXY, you can see on the DXY we've actually tapped the area of value, and this is the inverse of euro dollar. So by getting long on euro dollar, even though we didn't quite tap the area of value, okay, uh, sorry, I can essentially play the DXY. I can play the weakness of the DXY, because usually euro dollar will just move in tandem with it. Okay, however, it does alter my entry criteria ever so slightly, because this could be, some kind of bull flag, especially given what dollar CAD and Aussie dollar are doing, because this could be some kind of flag which pushes lower, or comes down to tap into that area. What I'll be looking for specifically from um, this pair today is a break above this area of value, followed by a tight flag, and then the tight flag afterwards would confirm that there was not enough liquidity here, or even at that little mini inflection point there, to send price to the downside to form. If we're going to form a flag, we will likely just tap in a bear flag. We will likely just tap in and push down aggressively. Okay, that's why we see these wicks. We wick above and we wick back down. If we don't wick above and wick back down, and we consolidate above the area of value, then we're likely not moving to the downside, and the DXY's weakness will kick in, and euro dollar will move to the upside. So that's what I'm going to be looking for, and then I'll be able to manage it up to this kind of first notable area of consolidation for something in the region of 4 to 5%. And of course, if I got the risk entry within the flag, then obviously the risk to reward increases. And if we take out that high, which you can't see anymore, okay, but which this high near miss to, then obviously there's a lot more profit potential. So that is my thought process today. As I said, I will, full transparency from me, whether I take a win, loss, or break even, I will break it down for you in every video that I make when I've actually taken a trade. But for now, have a great day, and I will speak to you again soon. Thank you very much indeed for watching.